Personal loans are types of unsecured loans that allow you to borrow money without providing collateral. These loans are typically repaid in fixed monthly installments over a set period, helping you manage repayment with ease. Understanding how personal loans work, their terms, and appropriate use can help you make smart borrowing decisions. A personal loan is a one-time borrowing from a lender like a bank or financial institution. It is unsecured, meaning you do not need to provide any asset as collateral. You borrow a fixed amount and repay it in equated monthly installments or EMIs over an agreed tenure, with interest charged on the borrowed sum. Personal loans are disbursed as a lump sum amount that you receive in your account and repay with fixed monthly payments. They often have a fixed interest rate, making monthly repayments predictable. Since they are unsecured, you do not need to provide any collateral when applying. Loan amounts vary widely depending on your needs and lender policies, ranging from small sums to larger borrowings. Repayment periods usually span from 1 to 7 years. The fixed monthly payments make it easier to budget and avoid surprises during the loan tenure. Personal loans are useful for consolidating multiple high-interest debts into one manageable payment, covering emergency expenses without needing collateral, funding large purchases or special events, and improving your monthly cash flow with structured repayments. For example, if you borrow $10,000 at an 8% annual interest rate and plan to repay over 3 years, your monthly payment can be calculated using a standard loan formula. This calculation helps set clear expectations for budgeting your monthly payments. The monthly payment of a personal loan is calculated using the annuity formula. It divides the principal amount multiplied by the monthly interest rate by the difference between 1 and 1 plus the rate raised to the negative number of total payments. This formula ensures equal monthly payments over the loan term. Personal loans provide unsecured, predictable borrowing that suits a variety of needs such as emergencies, debt consolidation, or planned expenses. It is important to compare interest rates and repayment terms carefully. Always borrow responsibly and only take what you can repay comfortably to maintain financial health.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.